Welcome to Stock Market for Beginners. It is a pleasure to assist you with this stock market journey. My purpose is to help you achieve financial success and financial freedom. Many people don't know all the basics of investing, so I created this video as I continue to find the ways to communicate how this investing journey really works, and you can create a great future for you and your family. So I hope this video will teach you all the basics to start your journey of investing. So the stock market is another way to invest your money. Many people use real estate. Real estate continues to go up in price year after year if you look at the history of real estate. The stock market is another way to invest, which the general stock market returns around 10% per year. So here are some of the prices of homes in the past. 100 years ago, a house was worth on average $3,200. Now 50 years ago, a house was worth on average $33,000. 30 years ago, the average cost of a home was around $126,000. And today, as I make this video in 2024, the median price of a house is around $400,000. So we can see the house prices continue to go up and up. And the same thing happens with the stock market. And the reason why properties or real estate as well as the stock market continue to move up is because of inflation. So as we continue to learn how to invest in the stock market, let's cover some specific topics, which are what are stocks, how to invest in stocks, how people get wealthy by investing in the stock market, and what stocks are best for beginners. So stocks is a little portion of a company that you can invest on. Could be a Tesla, could be Apple, could be Google, could be Microsoft. These very well-known companies that you can be part owner of a very small part of a company. Or if you have a lot of money, you can own a big portion of that company. That's what stock is. So to invest in stocks is very easy. You just open a brokerage account, which will allow you to buy or sell stocks. You deposit money into that account and you buy the stocks you want with that money. It's that simple. So now that you're ready to buy stocks, you want to buy good stocks, good companies that are going to multiply your money for the future. So the idea is that the price of these companies will continue to move up, they continue to develop, they continue to produce more products or services that are going to increase the profits and is going to provide some increase in our original investment. Besides, they could also pay dividends, which is a distribution of a part of those profits that the company made. Most people don't talk about this, but how do you sell stocks? You just take the stocks that you purchased, you sell the stocks in the same brokerage account, you transfer then the money to your bank, and voila, you already have your money from your investments back into your checking account. So when you sell stocks, you can do three things. You can keep the money in the same brokerage account, which some of the brokerage accounts, they pay you interest for the money that you have in there. The second thing you can do is to buy another stock or another ETF, which I'm going to explain to you in a moment what is an ETF, or you can transfer the money to your account, like we mentioned, and spend it on anything you will like. The different types of investing in the stock market are these. You can buy and hold. You can become a dividend investor. You can become a speculator, or you can become a trader. So let me tell you what the difference between these styles are. When you buy and hold a stock, you can buy a stock like Coca-Cola and just hold it for years to come, where you receive dividends and you let the stock or the company appreciate more and more through the years. This could happen in years or could be decades. The next style is to become a trader. Traders buy stocks and sell them very frequently. Could be a few times a day or could be in a few days or a few weeks. Traders don't care if the company does well or not, they just want to buy or sell the stocks. They don't want to hold those stocks for a long term. One of the things that I recommend you is that if you're beginning, please avoid doing trading. This is one of the mistakes that most people do at the beginning of the investing journey, and you really need to develop knowledge and experience to be able to do this. So please avoid to spend all your hard-earned money doing trading if you don't know what exactly you are doing. Another style is to speculate. Sometimes you can speculate in small companies, maybe a new company that came out with a new concept. Some people said Tesla, for example, 10 years ago was an speculation because nobody knew what that company was going to become. But this is how many people actually bought Microsoft when it was a baby company. Some people bought Google, and some people invested in Apple when this came out in the stock market. But there are some new companies that are coming out all the time. And if these companies don't have any history, this could become a speculation. So I encourage you to investigate really well into a company before you buy it. And if you're speculating, I don't recommend you to spend a lot of money on this because you could lose 100% of your money. Another style of investing is dividend investors. Some people buy the stocks for their dividends. So even if the stock doesn't go up or down in their price, some companies continue to pay dividends year after year. And many people accumulate most of these stocks so they can receive the dividends every year without doing absolutely nothing. So when they retire, all they have to do is just hold the stocks and continue to receive dividends year after year. So let me tell you, in my opinion, what stocks are good for beginners. There will be many stocks to choose from in different industries. This could be in energy, in technology, in real estate, in retail, in banking, pharmaceuticals, information technology. There are many sectors that you can invest in different companies. And you can invest in stocks in the United States or in the whole world. But in my opinion, one of the ways that you can start investing is investing in strong companies. Strong companies that have been established for many years, and probably companies of products that you use all the time. Either if you shop at Walmart, or you use Google, or you use Apple, or any other company that is very well established, and especially a company that is delivering positive net income for their investors. So this means that they are creating positive profit every year for their investors. So please take my advice. The stock market is not a place where you can get rich overnight. The stock market should not be seen as a gambling tool. So the way to make money in the stock market is that we need to be patient, and it takes time. And my whole goal is that you can make money. So take your time, educate yourself, investing in strong and solid companies, and trust me, you will do very well. Most new investors don't know where to invest their money, where to start. One of the ways that I tell everyone that they should start is with index funds or ETFs. So let me tell you what they are.
Thank you for watching the first part of this video. To watch the second part of this video, please click here in this link or scan the QR code on the screen. I made these free videos so you can continue to learn.